Hello everybody, it's your guy Danny K here again with another quick video on some technical analysis tools. Today we're going to be talking about Fibonacci retracements and extensions, different levels of support and resistance, and how they're used when reading charts to kind of predict price increases or price decreases. Essentially what a Fibonacci is a tool that's calculated using this Fibonacci kind of sequence, which basically the Fibonacci sequence is, it's like I guess you would call it an algorithmic sequence where the prior two numbers add up to equal the next number. So 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, and so on. It's used a lot on charts to kind of figure out the tops and the bottoms of certain movements and certain trends within a time period, and then within that top and bottom area, seeing areas of bounce where there might be support and resistance and where prices would go up or down. So I guess really the best way to kind of explain it is to just jump right into it. We're going to go ahead and do the retracement one first, and then we're going to do extensions. So retracements are generally used during it can be used in a couple of different ways. One is if you're in a clear downtrend, it's a good thing to use to kind of see, okay, where are levels of support that I should keep an eye out for? What are things that if they break, I need to, readjust my strategy? It's very simple here in TradingView. Obviously, we have Bitcoin. You pull it up and take it down. Oh, I'm going to have to move this. And usually people will go all the way down to, I'm going to have to change my settings, but would usually go down to the lowest most point of the chart. So I'll just get this set up and then enter in the settings here. Go to settings, 0.23, 0.38, 0.31. 0.236, 0.5, 0.618, that's a very important one. And some people like the 0.786 as well. And it looks like mine is backwards. Oh, I know why. And go to the reverse. Okay. So as you can see here, this is based off the last run. I have it to the very top, about the 1400 range, all the way down to the very, very bottom of the 3329 range. And if you go in here and you look, I think I need to push this up just a little bit here. Where is it? You will see oh, that's why. Here. You will see these lines and percentages play out. And as you can see, we have the 0.618 Fibonacci level, which is kind of the golden level that a lot of people go off of. A lot of people look for bounces up to 0.618 or the 0.50. Depending on how bullish they think the market is or how strong a bounce there might be. 0.786 has been generally a historically good point for resistance, so usually you'll get a big blow off top, and sometimes you'll see like a bounce between here and then up and then down, and play in this area before it makes a decision whether to go up or down. A lot of these you'll see that a lot on smaller time frames when it comes to like bear flags and stuff like that, where you can do a very small sequence of time frames and periods that will then show you that kind of difference. Another thing that a lot of people don't really do when it comes to this retracement tool, I have it all the way down to the lowest price. But some people like to basically go and look at, okay, what is the lowest price of the latest period of consolidation? And I look here and I say, okay, here is, the latest period of consolidation since the last run-up. and the lowest point, disregarding that wick because, you know, is this right here. And here you'll see it's basically kind of the same thing, but using different metrics, different levels. It gives you kind of like a better idea of, you know, so we could see this bounce down, and then we could see a little level of support at the 11,245 area, which, as you can see here, you have a little bit of consolidation there. You have a little bit of consolidation on the lower end here. It's a pretty simple tool to use when it's for scouting points to, you know, buy and sell. You know, pretty self-explanatory, especially, you know, if you are familiar with trend lines and, you know, just basic support and resistance. You know, high, like here's the high, here's the low, here's the lower high, here's the lower low, there's the lower high, and, you know, just in case anyone's not aware right now, we are looking to see if this, you know, right now we're at $1,200, just below it. We're looking to see if we can get Bitcoin to break on this study the 0.786 line, or the 12,500 point, so then it would then close a higher high. And if we get a higher high, then I'm pretty confident in saying that we're going to continue a bull run. But if we don't, that might signal that we're going to be going back down to further consolidation and further retracement down below. And another thing too I will look at that I think is interesting that a lot of people don't do, and this is more used on a larger time frame, but if we go to the 1 day and we, you know, do that full retracement study here all the way down. Now, when we were in this bear cycle, right, and before any of that major dip in November happened, right, so people thought, oh, okay, 6K is the floor. And a lot of people would look and they'd go, okay, put this here, put that down there to the most like the lowest point, and you'll see that these, you know, these generally line up. You know, you have a little wick, a couple of wicks above, and a couple of wicks below the support ranges. And I'll actually get into kind of a cool little tactic about that in a minute, in terms of like helping avoid getting stopped out and stuff like that for settings. But so a lot of people were playing this and saying like, oh, okay, here we go. You know, here's the bottom. This is going to be, you know, this is going to break to the upside. And as we all know, it didn't. But you could have, if you thought about it, brought the bottom down to the 236, down to the bottom. You take a look at that, and you kind of get a pretty good lineup of what's going on. But I noticed that if you took the 3.8 here, and you put that on the bottom, yeah, roughly the bottom, about 6K, you'll look at this 0.23 level and realize that it is very close to the bottom that actually came in, which right here it is just below 3,000, and obviously we all know that the bottom tentatively was 3,200. So it's just something to look at in terms of playing around with this and looking at different levels in terms of the Fibonacci sequence to see if what could potentially happen, what might work, what might not work for you, stuff like that. Now, if we were to go, let's see, what should I do? Actually, let me do this. So, a lot of people talk about different like settings and stuff that they put on these charts here. And if you go, I have a lot of crazy settings on mine. So, if you go here and you look, obviously the most common ones are the, you know, 0.023, 0.318, 0.5, 0.618, which is like the golden ratio. Everyone's like, oh, the 618, respect the 618. I also like the 0.786 for a little bit of smaller, shorter term plays, and then the full 100%. All of these I'll get into on extensions. They're used for the extensions for uptrends, but so a lot of people will have these ratios, but if you're a whale, okay, and this might be a little confusing, and I might not do the best job explaining it, but if you're a whale, and you have, and you know that everyone is going to be using the 0.5 Fibonacci level as a bounce. Like, let's take a good example here. A perfect example is going to be, okay, this point, I mean, really, we could do it on all of them. So let's say people are going to be like, okay, let's respect the 0.236 level on this. And oh, okay, so we should put all of our buys in here and then have stop losses, you know, just in case it goes lower. Actually, let me redo that. I'm sorry. So, yeah, perfect. Okay, so, you know, people will be looking at this and say, oh, okay, here we are. Let's go ahead and look at this and say, oh, okay, so 1100 is kind of like the like top resistance range on the 0.381. So I'm going to go ahead and put a short in there, and that's the general population. However, whales tend to know this, and they know that a lot of people are going to be looking at this level. And as a whale, I want to stop out as many people as possible to then drive the price in whatever direction it goes, and then knowing of that price change from those stops being liquidated, readjust my positions accordingly. So if you were to go in here and change this, and I can't remember if you go up or down, so it's 0.386, so if we were to go 0.4, no, I'm sorry, 0.37, okay, 0.395, 0.345. I'm doing this so wrong. So let's do 0.4, okay? So really 0.425, 424. If you did 0.424, that was the number. I'm sorry that went wrong. If you did 0.424, you could see, okay, that looks like really where the support level and the bounce down really got respected. And you can say to yourself, okay, so I'm assuming that here a whale is using a Fibonacci level of a 0.424 as opposed to the 0.361 and or 381, and is, you know, using that to kind of manipulate the market. So that's just something kind of you keep in mind when you're looking at these levels. They're not set in stone. Nothing in charting ever is, really, unless the only thing set in stone when it comes to charting is the price candle that happened before it. And so it's kind of interesting to look at and say, all right, here are these levels. These are all the levels that, you know, the general population is going to be using. So I'm going to go ahead and adjust them up or down a little bit accordingly how I feel about the market and what I think is going on. I know I probably messed up that explanation in explaining it, but you know, I tried my best. So that's a little bit on retracements. Now, if we were to go on to Fibonacci extensions, give me 1 second. I'm going to just turn off my fans here. 1 second. It keeps doing this thing. I know that the audio is terrible. This is the least professional video I'm ever going to make. Well, it didn't turn it off. Great. Anyways, so where was I? Right. So here, this was the retracements. Now let's go to extensions. Now, what I like about extensions is basically, you know, a lot of people use retracements when I feel like it's a lot more common because people use it after a big blow off top. They then, you know, lay out the retracement and see where it's going to bounce and go up and down. But I see that a lot of people have problems trying to figure out how to establish profit targets, or where are they going to see areas of increase, and where can they expect to, you know, exit out of their position, add to their position, things like that. And so a good tool to use is going to be the Fibonacci extension. Alright, so here we are on the Litecoin USD chart on the weekly. I generally like to do extensions on longer term time frames because I feel like it, in the grand scheme of things, it takes longer for the price to sustainably go up long term than it does to drop. As you can see, 50%, and we have seen 50% drops happen in a matter of 24 hours. We've seen 25% drops happen in 24 hours. It just happened. But to do this study, you're going to want to go ahead and you'll hit the Fibonacci Retracement tool. You'll take the bottom here and line it up with the very top, the highest high wick. It's going to be right there. And some would argue you can even use that wick, which is that top for the dump, but for all intents and purposes, we're going to use this wick here. So, also too, just so you get an idea of how this is executed, or how you get this tool here, it's actually pretty simple. You go into settings, you will see usually all of these will be selected, but because you're doing extensions, and this is all in percents, you got to think, okay, I want 1 point whatever percent gain. So you'll see all these 0.23s, 5s, things like that. That's 23%, 38%. That's all retracement levels. Deselect all those, then do your 1 point, your 1.618, 1.33, 272, 1.5, 786. Some people do 1.414. And some people also like to do, the 200s and the 300s. It's really up to you, and it's really how you feel about your levels. You can use different levels and different ratios for retracements than you do from extensions. It's not a perfect exact science. This is all somewhat of an art in a way. But generally the most commonly ones that are used are going to be that 0.68, the 0.5, the 0.318, and the 1.38, 1.5, 1.68, 1.78, stuff like that. So you'll have them all selected here. These are the ones that I'm using right now, and I have these selected for a reason. I'm gonna these higher time frames, the 200, the 300, the 400, because I'm gonna show you something that happens over time. When you just keep extending them instead of redrawing them. Yeah, these are the things that I have, and then it's very important to then hit the reverse button, so then your extensions will go up. So here you can see I did the lowest wick and the highest wick, and then if you dig into the chart, you can see that we have, all right, broke out, hit the point, respected the point, or 1.272, consolidated just a little bit, just below the threshold line, then broke out, shot back up all the way to the 200%. And there it took a little bit of a pause and it bounced between the 200 and the 1.786. So, with that information being given, you think, all right, well, these are my extensions, here is my charts, let's take a look at, I want to see it go to this level, I want to see it go to this level, and just based off of these, set sell targets, or set reload zones. Set a sell target for this level here, and then rebuy it back somewhere lower here. Oh, by the way, this isn't financial advice. I'm not a financial expert. I have no fiduciary responsibility to give you the best advice, so please do your own research. I'm literally just a guy on the internet who looks at charts. So with that being said, here we go, and we can see, all right, it respected this good reload zone here, and if we were to keep going, here I have the 300, 3.27, 3.618, 4, 4.68, and if you notice, over time, these they don't really line up as accurately or as much as you would like to see. So I generally don't really like using them, only in extreme circumstances when prices are moving very fast. I like to keep it between the 2, and I'll put the 3 on there sometimes, but it's not going to be a big factor for me. So what I'll do is, okay, here I am, we hit this reload zone, let's go ahead and bump it up. Now that we've reached that phase, we'll bump it back up. Some people will say use the wicks, some people will say use the candles. I say let's cut it in the middle, right? You'll see that, here we go, we have another candle which, boom, deadlock right on to the 200% gain within a single week. Boom, and that was a fearless candle, and you'd be taking profits along the way. Now, as you can imagine, with essentially what amounts to 400x, what is that, 30, well, I guess 3x gain, you're around 30 to 90 roughly, you're going to see a large pullback. And so on this blow off top, you see the big wick hitting that, respecting this 1786, sitting around there. I would go ahead and pull out my retracement and look at the downtrend and possibly play along here with the retracement tool. Or you can even look at the extensions, and let's say you sold here, you could then look at the 0.15, 0.27, and this was the 0.13, all different levels that you could possibly reload in on depending on your risk management skills. So you now hit this, it breaks out, goes to the next upside. What do? Extend it again. I'm going to do to the very top of this. And what do you know? Here we are, all the way up to the 0.5. And now we're seeing a little bit of I don't know if it would be a, I'd say a reversal, but at least a good slowdown in terms of the growth. You went from 30 to 130. That's a massive move. You see that is respecting this 1.5 extension line, playing here a indecisive doji, and then we got a dump down to the 1.272. And obviously a lot of this also correlates with how Bitcoin's price also reacts. And actually, I don't even know. Yeah, that's right. It did go all the way down to 100 there. So basically, I mean, I think you get the idea. And I don't know if I did the best job explaining it, but you generally get the idea of what I'm trying to accomplish here and what you try to accomplish with these tools. Generally, I really like these tools when you're in a position and you're like, okay, well, I know that there's this support level and that support level, but I'm not sure if I should, take profits here or there. I like this extension tool because it's a very good way for you to look at past performance and possibly chart out future happenings. Now, if we were to go ahead and, this respected that 0.168 line, the bar is on the 1.5. So really, I mean, it's up to the chartist, or charter, whatever you want to call it. You can either take this and say, all right, we'll extend it to the 0.5 and go from there and look to scout targets if this rally is to continue. Or you could even go on the wick, which is the 1.618, and go from there. Again, a lot of it depends on your trading style and what you like to do. Do you want to be a little more conservative? Do you want to take on a little more risk? Do you want to, go for that? But yeah, so right now we're just in that consolidation period, and that is basically going to do it for me in terms of retracements and extensions. Sorry this video isn't the best. I don't have the greatest recording set up, and my fans I couldn't turn off. So yeah, that's going to do it for me. Thank you for watching. If you haven't, please give the video a like and subscribe. Comment down below. It really helps with the YouTube algorithm. I'm going to be posting regularly. I'm not going to do just technical analysis stuff. I'm also going to do a good amount of market updates in terms of news that's coming out in the market, whether it's ETFs or regulations or whatever, in both the crypto and fintech industries, as well as the larger national equities markets in terms of NASDAQ, Dow, things like that. So again, my name is Danny K Crypto. Thanks for watching.